Thank you for tuning in. I'm glad that you're here. In today's home buying tips video, you're going to learn the 7 must-dos before buying a home. It's really important to get everything right. I know you're super excited to get out there and home shopping and find your great new home, make it your own, and invite all your friends and family over and have a grand old time. Let's take a look at the 7 things you must do before you can get there. Hi, my name is Andrew Finney. Please consider me your real estate geek. I'm always here to help, and my direct contact information is in the show more description below. So let's go ahead and lead in with must-do number 1. Must-do number 1 is finding a great real estate agent. And you really want to start with this so that you know how best to plan. Even if you're 1 year or 2 years away from buying your new home, or when you think that you're going to be ready to buy your home, it's okay. Go ahead and find a great real estate agent by looking at that agent's, reading their reviews, checking their ratings, looking for any specialty designations. In the case of buying a home, you'll want to look for an ABR, which is an accredited buyer's representative, and you also want to look for a CRS, which is a certified residential specialist. If you get a CRS, you're definitely working with the best. So that's must-do number 1. So must-do number 2 is to strengthen your credit score. Now, that probably comes as no shock to you, but what might come as a shock to you is that right now, a lot of lenders across the United States are able to approve people with a 580 or more FICO score. So the minimum credit score to buy a home is a 580 FICO score. Now, I will share this with you. If you're looking to get some of the better loan programs out there, you'll want a 640 credit score. And if you want the best rates and terms available in the market, you'll want a 700 or better. But don't let that discourage you, because if you can get in a home and you have a 580 credit score, it's going to be better than waiting the 2 to 3 years that might take to get the 700 credit score, because home prices are going up, and right now the mortgage interest rates are super low. Don't lose out on them. Must do number 3 is to figure out how much home you can afford. Now, that's really important to consider, because I know that you're probably looking on Zillow and Realtor and different websites right now, and they have monthly mortgage calculators. And while those are great starting places, and I've always said that those big sites are really good starting places to find a home and also to get an idea, a rough estimate of what's going on, it's just not accurate at the end of the day. The homes don't update in real time, and the monthly mortgage calculator isn't taking everything into consideration, like your property taxes, your homeowner's insurance, is there an HOA fee. It doesn't take those things into consideration. What you need to plan for is your monthly principal balance for your mortgage, your interest associated with that, your property taxes, your homeowner's insurance, and if you have an HOA. Now, some communities, like a master plan community, may have 2 HOAs. You may have a master plan HOA fee, and you may have a sub-association fee. So keep an eye out on that and factor the whole number of what it's going to cost to pay your monthly mortgage every month. The other thing that you're going to want to consider whenever you're considering how much home you can afford, or what are your utilities going to be? How much are you going to pay in your gas, your electric, your sewer, your trash, and cable, stuff like that? How much are you going to pay? And write out that budget so you can begin planning for it now. Must do number 4 is to save, save, save. Now, that probably comes as no surprise either. Even with 0 down loan options, and there are some out there, and if you're a veteran or active duty, your VA loan benefit is actually a 0 down loan. Now, what I found a lot of active duty and veterans don't know is that, especially if you're active duty, you're going to have a funding fee on that VA loan of yours, and you're going to want to talk to a great local loan officer, not Navy Fed, not USAA, not Veterans United, not those people. I mean, it's your choice, but from my experience in working in the industry and helping people that are active duty and veterans, it's best to work with a great local loan officer that can sit down and take the time with you and answer all of your questions. It's very important to do that. Now, there are some FHA down payment assistance programs which are virtually, to you, the buyer, it seems like there is no down payment on that loan, because it's being put on a grant's being given to you. You need to understand that there are trade-offs to that program. Nobody's going to give you money for free, so just be aware of it. It's not to discourage you, it's just to open your eyes and let you think about some different considerations about what kind of loan program is best for you. But you want a great local loan officer, and to start there with them so that they can explain if any specialty programs in your area. Here in Nevada, we have a Nevada Home is Possible grant, which is an absolutely phenomenal loan program for the people that qualify. You may have something similar in your state. It's a local loan officer that's going to know how that works, they're going to know how to get you qualified, and they're going to be able to explain the ups and the downs and the pros and the cons and the all-arounds for you, so that you can make the best decision possible in buying your new home. The other thing you want to consider whenever you're saving up, you save money, is not only for your down payment if you're going to end up paying one, but also for your buyer closing costs. Across the United States, the average buyer closing costs between 2% and 4%. Generally, it's best to factor on about 3% towards your buyer closing costs. Now, that 3% number comes off the top of the sales price of a home. So let's say that you are buying a $300,000 home. 300,000 times 3% is $9,000 you need to be prepared for your buyer closing costs. The buyer closing costs are above and beyond your down payment on your loan, so be prepared for it. Must do number 5 is to build a vibrant savings account. Now, what does that mean? Well, you're saying, well, Andrew, you just said it must do number 4, the save. I get it already. Well, must do number 5 is to build a vibrant savings account, because what else you need to consider are that you're going to have moving expenses. Might want to buy new furniture for your new home. You might want to paint it before you move in. It might need new carpet or new flooring or something before you move in. So you're going to want extra money on the side for those projects. If you don't need that, then that's up to you whether you want it, but you'll still want to build a vibrant savings account even after you close on your new home, so you keep money on hand at all times, okay? So must do number 6 is to get pre-approved, not pre-qualified. There's a huge difference, and there's a lot of stuff that I'm seeing on television, listening to on the radio, and actually seeing as internet adverts about getting pre-approved. Oh, it's simple, it's easy, it takes 3 minutes, it takes 5 minutes. No, it really doesn't. That's just not the case, because the pre-approval letter is what you want whenever you get ready to buy a home. The difference between a pre-approval letter and a pre-qualification letter is that with a pre-qualification letter, you can actually just wipe your ass with it because it's worthless. A pre-approval letter, on the other hand, is a local loan officer that has taken the time to review your income, your assets, your credit, and to go ahead and run verifications on all 3 of those. So when they're running verifications on things like your income, they're going to be looking at your bank statements, they're going to be looking at your W-2s, they're going to ask you for your last 2 years tax returns. Verification of assets, so your bank accounts, again, going to be taking a look at those. Any savings accounts that you have, any retirement accounts that you have, they're going to take that under consideration. They're actually going to run your credit and then make sure that there's not any issues with your credit, and if there are, that's going to expose it, and it's going to let you know what you need to do going forward. So the other thing that they're going to be taking a look at is your employment verification. Unless those 4 steps were followed, you didn't get a pre-qualification letter. And I have found that even, unfortunately, some lenders will say that they've done all that, but they haven't done that. And that's why you notice that some homes go on the market and they come back on the market whenever they were taken off the market, saying that they were in escrow, right? Well, the number one reason a home falls from escrow is lack of financing, an issue on the buyer's ability to perform on the loan, which is absolutely not your fault. So that's the difference in finding a great local loan officer that's going to actually take the time with you. It can be as quick as maybe 30 minutes to an hour, or the same day you can get in a pre-approval letter if you have everything ready to go. Or it could take a few days depending on what comes back with the information, or how long it takes for you to get that information to that local loan officer. Keep that in mind, but you absolutely want a pre-approval letter before you go home shopping. And meeting up and with must do number 1, going back to that point about finding a great real estate agent, that's why you do that. Finding a great real estate agent, checking the agent's ratings, reviews, reading their testimonials, looking for specialty designations, looking at their past performance. And by the way, an agent's past performance is, you really want an agent that has helped at least 12 or more families in the last 12 months close on a home. That's critical. That way you always get a fresh agent that's on top of their game. Going back to that, that agent will actually probably know some great local loan officers they can introduce you to, and you can begin that conversation there. So must do number 7 is the fun part. Happy house hunting, now you're ready to go. Once you accomplish the first 6 must do's on this, must do number 7 is a lot of fun, and there's a certain way of getting that done so that we can help you find your new home and find the right home for you by listening to what's important to you, your needs, your wants, and finding the right home for you. So have fun out there. If you have any questions about this video, please feel free to contact me. I'm putting my contact information on the screen right now. You can always contact me just to say hi, suggest a video, let me know if you have any questions about this video. I always enjoy hearing from you. If you haven't already done so, please go ahead and like this video, subscribe to the channel, and share it around with somebody you know it's going to be able to help. Thank you for watching today. Look forward to coming back and seeing you again tomorrow. Thank you.